Good evening, everyone, and welcome to the Inside Market Analysis special webinar presentation entitled The Winning Mind Behind a Professional Trader. Today is November 30th, 2011, and before we begin, I just have to pull up a quick disclaimer and run through you a few things that we need to do in order to be in compliance here. The Inside Technician nor any of its principals, employees, or partnerships makes any recommendations to trade any securities in any marketplace at any time whatsoever. The services offered here are strictly for educational purposes, and the client assumes all his or her own risk when making any of its own trading decisions when trading any securities within any marketplace. Our educational services are all designed to educate the client in employing the correct application of technical analysis to then be able to make better informed self-directed trading decisions. So that takes care of the disclaimer, and we can get right into the presentation tonight. You know, before we get into the title of the IMA webinar tonight, The Winning Mind Behind a Professional Trader, I want to take a second and thank all of you for logging on with us tonight. I always do this because I know nobody in today's world has any free time, including myself. But you've taken that time to be here with us with an open mind and with the expectation of learning something new. And that something should always be what you can take and immediately use into your current methods to become a better trader or investor. My name is Jeff Kelly, and I am the founder of the Inside Technician and the bi-weekly Inside Market Analysis Administrator and Facilitator. I have been trading in the markets every single day for almost 14 years now, using only technical analysis to make all my trading decisions every single day. And I do this because I've seen actual proof of it. I don't do anything in life general, but especially with regards to trading, without seeing actual proof that it works many times over before I implement it into my trading methodology. Tonight's subject matter is often overlooked, and I have never spoken about this before because in essence I have to reveal quite a few things about myself that are very personal, but I'm okay with that because if you really want to become a real-life professional and profitable trader, there are certain things that we need to do. You need to do, and I need to do. And that is understand that your mind controls basically everything that you do. And this includes your trading career, And so once we get our head around that, we internalize that, we understand that, we live in acceptance of that, we can deal with it. We identify it for what it is, and we use it to become not just any type of trader. We use it to become great traders. A professional trader has full confidence in himself or herself, in her trading ability, his trading ability by following a highly structured trading methodology. He or she lives every day with an open mind to become a better trader. He or she assumes full responsibility for all their trading results. And most importantly, they have developed the NFL game mindset. I want to capitalize on the NFL game mindset for a moment here, and I'll use this analogy because I have a very good friend of mine who's passed away, a famous motivational, inspirational developer type guy who was a very close friend of mine for 5 years. And he taught me the analogy about the NFL. There's a lot of people who practice. They go to college and they train really hard. They go from semi-pro to pro. They're actually out there every single day training as hard as the guys who are playing in every single game. but they never get to play. And why is that? The reason, I believe, because of the actual proof that I've seen in my life and in the 3.5 years that I have been training traders, is that they are missing a piece of the critical element in becoming a real-life profitable trader. Now, I'll briefly touch on something that I believe is one of the biggest keys to this, and it is believing in yourself. That's a pretty broad statement. Believing in yourself is knowing who you are, what you're doing, what you want, what you expect to get out of life, what you expect to give. And in this case, it's about knowing your trading methodology inside and out. A lot of people walk into the marketplace and they expect that they can come in and study for a couple years and start to trade and make money. It's not the case. We have to prepare ourselves in ways that we never ever thought possible in order to land as real-life profitable traders. From divergent thinking to divergent acting to creating your trading environment, not the one that life wants to give you, to thinking positive all the time, to going through the entire step-by-step, structured, learnable, repeatable process that it takes to actually internalize the trading methodology, so when the moment comes, when the moment arrives to place that trade, you have the conviction to do it. And the only way you can do that is by going through it. There is just no other way. I'm sorry. But this is the reality of trading. And so this is really what I want all of you to understand. Because I know that once you trade passively and you're properly trained, your trading career takes on an entirely different level, an entirely different potential profitability, a balanced life where you can actually have something outside of trading as well. So on that note, I'm going to go ahead and get right into the presentation, and I want to say that tonight we have with us a few invited guests. We have Larry Jacobs with us tonight, who is the World Cup trading champion, World Cup trading champion in the year 2002. And we also have Jeffrey Gibby from Metastock, senior business development person who I work with regularly. Two very solid people, and I thank him for being with us as well. So here's the big change that you all were notified by in a newsletter, that the IMA webinar has now changed, and we include the SP500 Emini Futures continuous contracts. This is something that we had a lot of requests to do because it is the most highly traded futures market in the world today. Why? Because it has the most liquidity. Why? Because the margins aren't as high as the normal S&P 500 futures market. So you, as an individual trader or investor, can trade this market and potentially trade it for some high percentage moves. We have an awful lot of information to go through tonight, so we're going to move rather quickly. I will take questions along the way, and if you'd like, I can hang on the line after we finish and we can answer some of those final questions. But here you're looking at a chart, a end of day candlestick chart of the S&P E-mini futures continuous contracts. Now, we have people with us tonight from PFG Best, including some of the administration. It's a futures firm out in Chicago. And last November 16th, I did a presentation out there on exactly this, the E-mini futures. And it was entitled, How to Trade the Market Volatility Like a Professional. At that time, we couldn't go real time, and I couldn't do a market call because it was not in the picture. But right after that, on my own IMA webinar on November 16th right here, I made the call that the market would correct more to the downside and that we would have a short-term sell-off. And this is consequently what has happened since that period. Now, everybody knows here that we use Fibonacci retracement levels to lay out where prices can get magnetized to in the future. Now, here we have our connection points from here to here. Again, this is on the SP500 Eminis. And at this time, those of you who follow along with us on the Dow knew that this was our connection point, and prices had gotten gravitated to a few of these levels right here, like here at 50%, and held that level within a trading range of 38.2 to 50%, moved up, hit 61.8 exactly, and then leveled off. Here again shot up and reached on a high an official 76.4% retracement level that we have just decided to include as an additional level that I only taught in the course material before. Now, that and unto itself right here is more than uncanny. Why? Because the laws of nature have direct application to trading any market, anywhere. So now prices couldn't reach a double high here, turned back around, and as it stands, the prices moved all the way back down on a low to 23.6, where they turn right back around. Here's the third day completing the pivot point low. Prices moved up, and here we are with one of the biggest moves up that has happened since the volatility started to wash itself away here on this new base formation low and shot up from there. We need 3 days to complete a pivot point low and more for a new base level formation, but look at how this level was hit right here. This is why we use it, because it's so reliable. And we also use it for price profit targets, to determine support and resistance levels, to be able to confirm where are we as compared to where are we now as compared to where we were, where are we going within the short-term future. So let's get right into the next chart here. At this time here, where I was calling a sell-off, here's what we had. I'm not going to go into a lot of trend line analysis tonight, but we did have not an official negative divergence because we didn't have a double top, but we did have downward momentum. A previous high could not be hit nor penetrated, signaling weakness within the money flow index unto itself. At that time, you could have also drawn a trend line from this baseline level here to here, as it was violated here as well for another confirmation. That would have put you short or flat a little bit outside of the time frame that I would like to, but if that's what you wanted to do, that's of course what you could have, and that's what we teach here. Here on this end, I'm looking at the volume. We were always subject to not a very strong new uptrend because of the lack of volume at this point on all the U.S. markets across the board. Here we don't have a lot of volume here. So now we're in a situation here where we have a huge up day. The up day today, you know, on the S&P itself, equity side, is 51.77. It's about 4.33%. A little less on this end here. But again, where is the volume? Some of the largest moves in any market in recorded history have always been because of large volume at certain levels to sell off, accumulate, and then act as the proponent for a longer-term uptrend. Here we are looking at the Chaikin advanced decline oscillator. Here we had weakness here, as you can see, by an official negative divergence. And we have a sell-off here. And so this indicator unto itself predicted exactly what was about to happen in a very short period of time. Here's your other trend line that I drew right here, connecting your data point here and here. Can everybody see how crystal clear that is? I believe that's amazing. So now that we have the ability to be able to discern, just with a few indicators, where do we go from there? We look at the next time-tested indicators that we use every single day to trade and be on the right side of the markets at the right time to make sure that we limit our risk and seek only the true high probability trades. You know, your greatest positional advantage as a trader or investor is patience. We have to let the trade come to us. We cannot chase the trade. If you're trying to hit and get in off of this low here without a confirmation for the way up, that's a dangerous game. There was a comment on the last webinar, why would I have decided to get in here versus here? Well, a pivot point has to officially form itself first, technically speaking, to have something to trade off of to the upside, right? And so here we have a base formation here, and we have two up days, confirming along with this positive divergence that this was the time to be in. So we always wait for the confirmation and multiple confirmations within multiple time frames because we're using multiple indicators with different parameters, but only the best of the best. Here we are with Stochastic's 21-period momentum index straight out of the can on Metastock's professional program, which is the only program I use. Positive divergence here. Here we shot up. It's very clear right here, people. We have crossover on the signal line and from above to below 80 here with a lot of downward momentum. And here we have a total internal breakdown showing serious weakness. All the trend lines as we progressed in time were all violated. Here's about your last chance to get out before the sell-off here. So here we have a very clear example again using some of the best indicators, the type of indicators that can't cancel themselves out because they're all based on mathematical formulas relative to time and price. Here we are where we have a situation where we have the crossover here of the 4- and 8-day pair of exponentials. I use these because we need to hit these market turning points running, people. As a trader, your primary responsibility is to know exactly where you stand every single day within the markets first, and then you go from there. This is the way. Here we have the sell-off here, right? And then here we have the up day, the crossover. And when did it happen? Right after today's opening, signaling confirmation on the 4- and 8-period EMAs that is a go. Here we have the MACD that had the strong positive divergence, but look at the type of negative behavior here of the MACD. The cross was long before the sell-off right here back on 11/8. A lot of internal weakness here, people, long before the sell-off. Here we are in a situation, if you wanted to, you could draw an additional trend line from here, green to green. We have both of these, the MACD and the signal line, entering the apex of a pattern, and it's got to come out one way or the other, so there's an additional confirmation right there. We're looking for a cross here. If we even have a small sideways move tomorrow, we could possibly have the MACD cross come across the board tomorrow. So that is the end of day charts that we use to determine what are the higher probabilities for future directional price movement that we have the ability to determine for a period of 3, 5, or 7 days. I would never think of trying to predict any more movement, future directional price movement on any market, any group, any stock, any future whatsoever for more than 7 days. And that, again, has its direct relationship to the law of numbers. So that's something to think about and take under serious consideration. So here you have what appears to look like a seemingly end-of-day chart, but this chart is, in fact, updated in real time. And I want you to take a look at what I'm looking at, and I want you to reference the close of 1128 right here. For me, I knew that at this level here, there was a good possibility that these two lows right here would be the area that we could find some support. That, along with Fibonacci, as you just saw, acted as an additional confirmation, right? These two bars right here. So there's something to trade off of. Here we are in a 15-minute chart. If you go back to the date where the base, that pivot point was formed, and the very next day we started to finish that pattern, here's how you can tell on the 15-minute charts what was about to happen, because everybody wants to know, Jeff, how could you possibly have known in advance that this was going to happen? Well, I knew because I studied the 15-minute charts, because the 15-minute charts are the mother of all time frames to trade with much higher profitability. We have a question. The AD oscillator, does it relate to checking money flow? The AD oscillator in itself, Fernando, good question. The AD oscillator is basically a graphical representation of all the sum of all contracts that are advancing versus declining, one divided by the other, and then plotted out as that single graphical representation to be able to show you the reality of where the smart money is moving to ahead of time. And yes, it does have more often than not direct relation to money flow, because money flow, its calculation is based on accumulation and distribution, and usually money flow will come in before, like the insiders have orchestrated their moves before the general public knows. I hope that answers your questions. The platform that I use is Metastock Professional 11. It's the only program I use. So here we have a situation just looking at the relative comparison between the volume and price levels. And we have an established trend line, longer term trend line on 1122 at this baseline level right here, as connected to here at 1123, broadcast out into the future. This is exactly what I was looking at the time. Now, understand this is a 15-minute chart, and this here is clearly distribution and one spike, the way I see it, of accumulation to set this level in motion. Now, we have very little volume here, but look at what happens when you're paying attention. Right now, we are 11:25 at 9 a.m. Okay? And what day is 11:25, people? Is it the day after Thanksgiving? Everybody's sleeping here. This is the early morning, overnight, where nothing is going on besides a lot of people coming in on the institutional side, hedging their positions. And here we go. Here's the volume that comes in right at 9:45, from 9:30 to 9:45, and we start to move up. And here we go back down for a final shakeout right here. This is exactly what we teach people. The insiders, they want to shake you out. And the other indicators that I'm going to show you right now will prove to you that when you don't get shaken out and you get in early enough, this is what can happen. Gapped away, prices started to move up. Here we are in a situation where we have upward continuous movement. Okay? Remember, people, at this point right here, when is this? This is all 11:27 at 10:30 p.m. This is the overnight stuff, and it's still moving up. Here comes the morning volume figures. 9:45, 144,000 contracts traded. Hey, that's something to take note of. And prices, here's the end of the day, and we keep going. Excuse me. There we go. And now we're in a situation here where we have the day's activity, the overnight, and again, volume comes in, and look what happens here. Look at the size of this move right here on 11:30 today at what time? 6:15 a.m. How many people are up at 6:15 a.m. besides me? How many people are up at 5:30, at 5 o'clock? I hope you are. And there's the move. Here we go. And here's the rest of your action for today. And right now, it is 11:30, 2011. Okay, Eastern is 11:15. The majority of the session ended right here at 4:15 p.m. Now, let's take a look at everything else now that I've shown you all the volume. Here we are in a situation where we're looking at the MECD on the 15-minute charts. Here we have one divergence as compared to price. These two, 1, 2, this one, and here. And we have one divergence. Prices level off because of that volume spike. Here we have the shakeout to fake everybody out. And now we have a secondary divergence right here as compared to price action before the move and MACD cross. So here we are, the setup for the trigger. So all you had to do was be paying attention to the 15-minute volume MACD indicator chart with defaulted parameters, and you would have been at the right place at the right time. And you know what happened with the rest of this move. Here we go. And we're moving and moving and moving. Here we are. Again, another divergence. Before, more price movement from here to here. I didn't even pick this out for tonight's presentation, but here's another one right here. Here is compared to here. Here is compared to here. So there you have it. Next, I want you to take a good look at money flow. The question that came through from Ortiz. Here we have a strong positive divergence from here to here. We have another secondary divergence from here to here. And here we have the makings of a sideways triangle. Didn't hit the apex, but it darn sure shot out of it from below to above here, signaling exactly what was about to happen again. So now we have multiple indicators, multiple time frames, all giving us the same confirmation on a 15-minute bar that if you wanted to be in this early, you could have been. And you could have caught the very beginning of this move. And this is exactly what we teach here. Next, here we have the 4 and 8 day period exponential moving averages. Where's your cross, people? It's right here before the trend line break, isn't it? At 9 a.m., 11:25. Here we are. Here we are with the stochastics momentum index. Same trend line drawn above. We have a strong positive divergence from here to here, and then a continuation of that divergence from here to here. This red line here is a special negative 50 line that I use to make sure I'm confirmed before I go. Here's a trend line break here out of the pattern. Here's another one here before the trend line itself was broken and the up move started. One more confirmation. How much more does a trader need? What we need to do is we need to do our homework every day and take a good look at these 15-minute charts, people. Here is exactly how you implement the correct application of a trend line. Here's your baseline outside right-hand corner from the top, never the high or low. Here's your secondary data point right here, the outside corner open of 1123. Carried forward, your official violation cross below 2 above was on 1125. So we have one heck of a lot of things that are happening in this short period of time right here that everything has just told us, one right after the other, to tell you, to let the market tell you what it's going to do and come to you and not chase it and not be on the wrong side of the market and be on what? The right side of the market. We have quite a few graduates with us here tonight who have taken the Foundations course, who've gone through this process, and they know this now. The comments are always the same. They can't believe that they got that much information out of that course in that class. So right now, with regards to a market call on the E-mini futures, we have a couple of things happen at the same time. We have some indicators that at this point are still negative. We have a huge day up with not a lot of volume. So as it sits right now, until we see what happens tomorrow with the volume, we're officially stuck between 38.2 and 61.8 in the Fibonacci boundaries of these two retracement levels. With this huge day up, I expect that we should open with a correction on the equity side. How will we know? On the futures. People, if you think that markets aren't interconnected, I have a lot of course material that can show you differently because everything is interconnected. So we're looking for a retracement from this bar back down tomorrow to be able to determine where we will be on the equity side to trade the S&P Emini Futures continuous contracts. It's no more difficult than learning the real-time application, learning the end-of-day indicators as they're compared to the end-of-day price data, because that is the most profitable of all time periods, to be able to determine just how many trades you can make in this type of environment that I called from here to here, 13 trading days. As a day trader, where the S&P closes only for a very short period of time in the afternoon, instead of a position trader, you could have made a multitude of trades within this run right here, 30, 40, 50 trades, picking up 10, 15, 20 contracts at a clip. Could have been short here just by following the end of day and then learning, here's the key, people, learning the flow. Write this down. Learning the flow between the end of day charts and the real-time charts. This is where the greater probabilities for the higher percentage moves really lie. Now, before I go any further and get into the next segment on the Dow, I would like to introduce someone, and let's see what he would like to comment on. We have nothing pre-rehearsed. I'd like to introduce Larry Jacobs, a professional trader and now owner, editor of Traders World magazine. I've known this man for a short period of time, but I have nothing but positive things to say because of the type of person that he is, and I'd highly recommend the magazine because it is the technical traders treasure chest, and they have a lot of excellent equipment to help you with getting your trading room set up. Larry, can you hear me okay? I think we have you on.
Yes, I can hear you. Can you hear me?
I can hear you fine. Can we get a raise of hands to see if everyone else can hear Larry okay? Yeah. They can hear you.
Okay, good. Well, I was very impressed with Jeff. I did take his course sort of in a private session just to get an idea of what he was all about, but I was very impressed, and I think he's probably one of the better traders out there. You can tell by his confidence in his voice that he knows what he's talking about. So his trading system one reason it's successful, and this is what I sort of picked up from him, if you understand what he's done, he's taken, Jeff, I think you took 3 years to study and make sure your system works, and you went over the system over and over again for 3 years until you were totally confident that it worked. And that's why you're so confident, because you've seen it over and over again. The techniques that you use work because you've seen them over and over again, and when you pull your trigger, you pull it because you have total confidence in what you're doing. Where a lot of traders out there, they're interested in a computer trading system that they can push a button and make a trade with. They don't want to think. They just want something to tell them what to do. But the problem is with most of these systems, they don't work, and people will buy these systems and they'll use them for 2-3 weeks, and they'll finally figure out they don't work, and they'll get another system a couple months later and try it again, and they'll find it won't work. So the way Jeff has done it is he understood that he needed to find some way to find a system, and he took, I think, 3 years until he finally figured it all out, and that's why he's so successful.
Is there any one thing that you could put your finger on, if there was such a title, your greatest advice to traders? What would it be?
I think basically, just like you have done, know your trading system, know that it will fail some of the time. It may fail 30% of the time, and 70% of the time it'll be successful. So don't be afraid to pull the trigger, because you do know it's going to eventually fail. 30% of the time, that's part of your business plan. So know your system, use stops, and just understand that you need to have total confidence in your system from the repeated use of it. And that's basically all I'd have to say.
All right. Well, that says a lot for me. We're going to continue on. I want to thank you for taking the time to be with us, and I hope that everybody has listened very closely. He's a very humble person, as you can tell, but very, very intelligent, very seasoned, and has been around the block more than a number of times. I'd like to see if we have someone else here with us tonight from Metastock, Jeffrey Gibby, Senior Business Development Partner at Metastock, and have a few things to say about the program and how you, as a new or intermediate or even advanced trader, can benefit from the same product that I use every single day. It's the only trading program I use to help you become a better trader or investor. Jeff, are you there?
I am. Can you hear me?
Yeah. Can everyone hear Jeffrey okay?
I can sing a little song and make sure people can hear me. But I'm talking now, so hopefully it's coming through well.
Yeah, they can hear you.
All right, good, good. Well, I just need to, in terms of Jeff, we've been working with Jeff, I don't know, when did we start, Jeff? What was it, back in March or February?
Yeah, I think it was about March.
And personally, I can't say that I've actually been through his class. However, I have talked to quite a few people that have been through his class. And the thing that I like about Jeff, and I've sat through quite a number of webinars that he's done. The thing that I have to say is, if you're a new user or a new trader and you're looking to get something that's going to work well for you in your trading, I couldn't recommend Jeff enough. The people that I know that have personally gone through his course absolutely love it. The thing that we like to do when we partner with people with Thomson Reuters is, obviously we're a company that's been around for a long time, and we like to partner with people that can help people understand how the markets work, because that works very, very well for us. Obviously, you get customers that know what they're doing, they know what they're talking about. And based on the people that I've been working with this year, I would definitely recommend Jeff if you're looking for somebody that can educate you about the market and has a very, very specific laid out business plan. I mean, that's really what trading is about. You're going to take your wins, you're going to take your losses, and you really need a mentor. The market is a really, really expensive education if you go in there just guns blazing. You really need somebody that's going to be able to help you trade. And so for what that's worth, I'd recommend Jeff as a mentor. There you go.
Well, thank you very much. I appreciate all the compliments. For me, I did take 3 years off, and I pretty much was up all night every night to exhaust every possible technique known to traders at that time. I was talking to people all over the world. Here's the deal, people. The game's changed, and it has changed in your favor. Look, we have webinars. Look at this. This was never available back in 1998, 1999, when I was picking up a book called The Elements of Successful Trading by Robert Rotella. I think it's out of print. But when I was talking to I can't mention all their names, but you know who they are. They're all famous people trying to figure out, what do I have to do? And they said, what you're looking to do is not easy, but if it's what you really want, you'll find a way to make it happen. And so my goal, and I hope it can be your goal, is to understand that everything in life is a process. And you just have to go through one step at a time. I know you've heard this before, but there is a developmental learning process to become a real-life profitable trader. And if you miss a step, it takes longer, or you lose money. Well, it's better to educate yourself, take the time, invest in yourself, and use that as a springboard. Start paper trading and then go from there. Even if you're a pro, start paper trading with a new system, methodology like this one. Find, track, and trade the smart money and go from there. I'm not going to belabor that point. I want you to take a look at the Dow, because I know we're going to be a little bit over tonight. But this is a very special webinar, and we have a lot of information to get out. This is an end-of-day chart of the Dow, which was up an incredible 490 points today, 4.24% gain today right here. And we did have more volume on the Dow than we had on the minis, didn't we? Yes, we did. This volume spike is compared to anything that's happened in the last month is significant in my eyes. However, we still have one of the biggest days in the recorded short-term past here, right? This kind of day is more like some of these days here, isn't it? So I still think they're going to have some settling down tomorrow. On the Dow side, you'll know if you want to get up at 4 a.m. and track that market on the 15. And we didn't even get into the 5-minute charts or the 1-minute charts, right? And see what starts happening about 6:30, 7 o'clock, before the U.S. markets open, before the equities markets open. Here we are. Advanced decline oscillator is now turned positive because of the established low, moving up to confirm the price movement. Just crossed from below to above zero today. Here we are waiting for the cross on the MACD, like we were on the futures, right? Why? Because the MACD is a trend following indicator, a lagging indicator. And in this case, it's lagging because of the sharp sell-off, which created this distance, the spread between these two. But with some sideways movement here, this will still cross. Here we have the money flow, positive divergence here before this upturn here. I'll be looking to see at this point if we're going to have, okay, let's grab this trend line. Here we go. From here to here. tomorrow if we'll have a cross of this trend line right here. It's very possible. Here, the 4 and 8 day exponentials on the Dow market side were here, here, and again today, right here. So people, traders, take the time, go through your market analysis every day. Here we have the cross from below to above the signal line on stochastics momentum, 21 period, 3 period smooth, and guess what? The stochastics indicator itself is crossing below to above 50. This is why I use it. If you wait till 20, it can be late. Here's the price action in isolation. And here we are back. Here we go. Let's get right out of this because I have a very short period of time to do the recent profitable trade walkthrough that I do every 2 weeks. Do we have any questions before we? Could you make some comments on this issue, please? Let's see what we have here. Jay. I find technical trading fascinating. I'm a newbie. However, for 2 traders who I've just listened to in the past 2 weeks who are against TA, I'm confused. Could you make some comments on this issue, please? The comments I'm making, I think, are pretty well laid out. I'm making the case for technical analysis in the presentation that we're making tonight, Jay. And as we go through this, you'll see exactly how things really work in the real world of trading. Let's get right into this IMA webinar bolt. Here we are. Okay. This is Bolt. B-O-L-T, traded off of NASDAQ, assigned to the energy sector. Everything that we do here is bottom up, and they scans to find our candidates to trade because of high volume levels, because of price pattern setups, because of all the indicators are lining up with an X amount of bars to be able to trade only the best of the best trades, true high probability trades. And so in this case, I found the stock on this day right here in 1122 on an end of day scan, and I'm looking to see if I can get a retracement the next day to get a better fill. And when the market opens and I see how the market moves and the stock responds to it, and I'm looking at the 15-minute charts and the 5-minute charts in real time, I realize that I'm not going to get a retracement. So I only have one choice. I have to get best fill possible, and here I am. I'm in the trade at $10.95 on 1123 shortly after the market opens. And with this long tail up, I surely have possibilities of getting back to a higher price level, maybe even 100% retracement level on Fibonacci, as you'll see, or one of the other levels that are laid out that we use for price profit targets. I'm in this trade for 1, 2, 3, 4, 5. And I was out today at about 10:35 a.m., and I'll show you why shortly. Before the trade, here we have another positive divergence, and coming out of a chart pattern here before the move starts. A settling down, low volatility, intermediate term positive divergence on Chaikin money flow. We have the cross of the exponentials. The exponentials on the stock side are 3 and 7 days, long before the big bar up. Here we have a strong intermediate term positive divergence on the MACD, the cross here, and upward momentum, signaling that the trend had changed. Here we are, stochastics indicator. In this case, it's a 21 period fast K by George Lane. Crossing below 2 above 20, long before the move with a lot of upward momentum, signaling a go. Here we are on the standard money flow index, 14 period out of Metastock Professional. The same program I use long before move. What do positive divergences do? They clearly identify pent-up buying pressure that has not yet taken place in the form of price movement. How to determine what the insiders are really doing behind the scenes. Remember, people, the greatest value of any indicator is its ability to predict future directional price movement. If it can't do it, then we don't use it. Okay? Here I am again, in here, out here, on a level that I'm going to show you shortly. The gain on the trade was 6.8%, almost 7% in 5 trading days. Those of you that have followed us for a long time know that the trades come through 3, 5, 7-day hold periods, anywhere from 4. We've had trades 20, 24. One of the highest trades, percentage trades for the year was over 30%. This is the essence of high probability trading. When I'm looking at the end of day charts, as soon as I know that I have something that's level 1 ready to trade for tomorrow's opening, what do I do next? Understanding there's a direct relationship between the end of day charts and the real-time charts. Go ahead and create a real-time workspace. Double click. You believe that you're looking at an end of day chart, but it's updated in real time. Every second of every minute, this chart is being updated in real time. Here we are in a 15-minute chart. This is what this looked like before this move took off. Look at the long-term positive divergence on shaken money flow. Here's your usual shakeout to take out all the stops that were here so the specialists can grab a couple 100,000 and shake everybody out so they get in and they push their insiders' prices up, because these are the guys that control the prices. But we already know, because we're following the 15-minute charts here, that what happened here is nothing more than a shakeout to confuse you. But when you study this methodology and you learn the correct application of technical analysis and how to do this right, you're not affected by this. Here we are with the crossovers on the 3 and 7 period, moving averages, close of 1122 right here. Right here at this before trade day here. Okay, there we are. Excuse me, but it's right here. Okay, now let's take a look at something else. Here's the MACD. Here we cross from below to above right here. And when is this? It's actually trade day, right after market opening. Now, here we are with a divergence, positive divergence in stochastics well before the move up. And then we're back to money flow again. Now what I want you to see in this case, and I don't have the time to go through all the charts again, here's a manipulation. The insiders here, okay? Here's a volume spike by the insiders before the manipulation, and then right after this shakeout, here's the up move. Now, I'm in this trade right here. This is the day after the big up move when I couldn't get better fill, right? And I'm in here. Here we have the strong thrust of money flow. The fact that this money has fallen off here, this money flow, doesn't mean anything because the goods were already sealed with the spike in the volume here. And it's still in positive territory. Here we are with the breakdown on the 15-minute chart of where I got in right here. And why was my choice here? Because I knew the MACD found a signal line support, and we were going to trade off of that. As soon as I was sure of that, and we didn't have a cross from above to below, to get a better fill, I was in here with a close stop below. We're riding this trade out, and here we are. There is some volume that's coming along the way, right? And then, where do we go next? We go to the 5-minute chart to look for the exit. Here again, I'm in. Here's your volume along the way to support prices. Here we are, 4 o'clock on market close and 11:28. Cost of prices remain stable through 11:29, right? Moving forward. And here we go. I exited the trade at 11:70 at 10:55 a.m. today under the pretense, because it gapped away, that it would fill the gap. Okay, here we are after I sold off here. Why? Because a lot of weakness was showing up. Don't get greedy, people. If you already have a profitable trade and it gaps away, get out of the trade. Take your money, take your bat and ball, and go home. So now, let's take a look at the final slides here. The correct application of technical analysis really is critical to becoming a professional trader. Here, you're going to learn how to trade the SP 500 Emini Futures, or you're going to learn how to trade the U.S. securities market, or global securities for that matter. It doesn't matter. As long as it has volume, prices, and it's liquid enough, you can trade it. Traders lose in the markets because they lack a time-proven trading methodology. They begin to trade with insufficient capital, they overtrade, and they don't understand the positional advantage of waiting for the trade to come to them. He or she has too many conditions within the trading method, so when the trading moment arrives, they freeze, and they don't have the conviction they need to take the trade. He or she watches news feeds designed by the insiders to confuse them and therefore get manipulated out. And they're not highly organized like a professional. They take small profits instead of letting the trade run, instead of riding the trade like I did on the one you just saw. And they have not created a daily successful trading environment. We teach you how to do every single one of these things. Nothing is left on the table. Here we go. Because of designing something that nobody else is doing, because of a sincere desire to educate, as you can tell, and everybody who studied here knows, this is really what I want for you, if this is what you want. You work directly with me, your own professional trader and mentor. And here you follow a structured, learnable, and repeatable process to learn how to identify the smart money, these insiders that actually move stock prices, and capitalize on what they do. Because when you're sure you have everything lined up and that kind of volume behind you, you have the conviction to take the trade in a moment. You're going to learn here how to correctly interpret the most important time-tested indicators, and again, how to identify these true high probability trades, how to determine, where to get in and out with precision, because you're going to understand the flow of the end of day charts to the real-time charts. And here you're definitely going to learn how to create your trading environment, and not the one that life wants to give you. If this is what you really want, this is what I want for you. And at the end of it all, at the end of the day, what you're going to wind up with is, if you put your head down, you go to work, is that you're going to believe in yourself. And this is what it takes to become a real-life profitable trader. Getting properly trained, going through the process, and doing the work. But at the end of it all, you can have the kind of life that only a few people really have. And so, click through right now. The bottom of your screen right here. You can see the services we offer. Our prices are lower than anyone, and the attention to detail is second to none, as the graduates will tell you. You can click through here right now and get the complete rundown on the services, on the availability, everything. The one-on-one developmental training on the SP Emini Futures is now officially open, up, and running. And I do have one client. And the stock side is there for the taking. I want to thank all of you for taking the time to be with me tonight. Everybody's still here with us. Everybody that logged on is still here, and it's an hour and 4 minutes later. I welcome you to the services we offer. I challenge you to make the cause, invest in yourself, and I promise you, I'll go the extra mile. Thank you for being with us tonight, and I look forward to seeing you on the next Inside Market Analysis webinar. Good night.